Given the comments from Secretary Ross earlier today, are you surprised to see the market not reacting more to that?
Well, right here, not really. You know, honestly, when you look at the market, it has had a lot of resolve, obviously, the last, we'll call it, 4 weeks or so. It's kind of taken these negatives in stride. And once again, today, we're seeing that. But, you talk about what do we know? You mentioned today, claims committed 199,000, 50-year lows. You go back in history, guys, before a recession, you tend to see a spike of about 75,000 in initial claims. Right there to us tells us we're still probably a long way from a recession, and that's the big question. Is there going to be a recession in 2019? At LPL Financial, we do not think so. And don't ever forget here, since World War II, we've never had 2 down years in a row on stocks without a recession. So if you don't think you're going to have a down year, which we don't, maybe, this 5% bounce in January is great after the worst December in 87 years. Maybe some back and fill consolidation, but we still think, it could be a pretty good year for stocks here, once again, to outperform bonds in 2019.
Rick, I want to ask you about the other topic we spoke to Steve about. What's your take on the ECB and European data?
There's no better entity to speak to the central bank of a given country sometimes than the knee-jerk reactions and trends of its currency. So if you look at the euro versus the dollar, worst levels since November. If you look at the euro versus the pound, worst levels since April of 2018. If you look at the euro versus the yen, we're not quite there, but we're close. We're in the same zip code as the close, right around mid-2017 for the euro versus the yen. Listen, I don't doubt that Mario Draghi's in a pickle here, but this is definitely of their own making. I don't think they timed it out right. I don't think they... Let's rephrase. I think Mario Draghi and the ECB are waiting for the absolute perfect, picture-perfect opportunity to normalize rates. There is no such thing. And I also believe there's really not many tools left in his toolbox. They either make a bigger balance sheet or they go even more negative than the deposit rate at minus 40 basis points. And considering how weak their economy has been with that medicine applied, I don't think the latter. Will they go into a recession? I think out of all the major economies in the globe right now, putting China aside because I don't really trust their numbers, I think Europe could.
Although, Rick, I'm not sure there was really the opportunity for him to hike rates. It's just a question of the economy being
not
a lot
recently.
weaker.
Yes, yeah, not recently, but I think there were opportunities. Yeah. No, you know what? You make a good point. Let's go with that. Let's say after they made their balance sheet large, after they dropped rates to minus 40, there was no opportunity to normalize. Then I guess it's just a bad mistake and in the future to learn. Don't apply a medicine that once it's in your body, it doesn't come out whether it works or not.
Sure. I think that's a very fair point, Rick. Ryan, back to the U.S. Equity markets. How are you positioning? You do believe the markets can continue to go up. Is that in growth stocks, value stocks? Which sectors in particular?
Great question. Right here, Wilfred, we think value. Now, you look historically, just valuations on value are really low historical relative to growth. Also, later in the economic cycle, you tend to see value do a little bit better. And as we just said, we don't see a recession. We think this economy, there's more fiscal stimulus as a percent of GDP this year than there was last year. So that's still a tailwind. We're of the opinion the yield curve can finally start to steepen a little bit here. Obviously, that should help financials, a big part of value. So value, also emerging markets. We just talked a lot about Europe. Overall, we don't like Europe that much. We think emerging markets, guys, there's 1 billion smartphones going to be sold this year. 70% of them are going to be in emerging markets. Valuations are low and really good earnings in emerging markets. That's another place we think we can find some alpha outperformance in 2019.